Hi guys, this is Mr. Forex, and you see in front of you my trading plan for Euro-Dollar next week. And if you want to find out how I drew this pattern and why am I looking to trade only this way, stay here and we'll see after the intro. Okay guys, so to explain it better, I think we need to remove all the drawings that I have here. Let's go back on the daily. We used to talk a lot about Euro-Dollar the past videos because it is a pair that it is obviously very interesting because it is the most traded one, and you see that in this moment we are consolidating around a price level that goes from 1.17 to 1.20/21. So price is constrained by these two levels, and this is the reason that I am going to pay attention to trade opportunities that forms only at these price zones. So if you have to draw the channel, it would be of course something like this is the bottom and this is the highest place of the recent consolidation. So basically what am I looking to do is trade just at the edges of this consolidation area. So in this case, these two zones are the one that I'm most interested in because I know that those are the edges of the channel, and so we have most probability trades around these zones. Of course, there is a middle structure point that is right here in the middle, but in order to trade from there, I want to have some price action confirmation, something like a small formation that makes me think that it is going to reverse. Otherwise, I am just paying attention to the edges. And in these zones, I can trade with a simple limit order if I find some pattern that point me that specify like advanced patterns the entry point. So going on the 4-hour chart, you can see that we have this most recent swing, and if we measure this out, you will see that the 61.8 retracement is hit and price came back and touched again the 61.8 retracement. So those conditions are the ones that create a Gartley formation. So the D point is going to be at the 1.27 extension of the A to B leg. So if we go back here, you will see that the 1.27 extensions comes right at the lowest point of this channel, right in that zone that I drew before that signifies the bottom of the consolidation period. So this pattern will be something like this. I usually place limit orders right here and I set my stop loss below the X point. You can use ATR, you can use something like a fixed amount of pips, or you can use 1.13 extension of the X to A leg. If you want to find out what stop am I using, you have to follow me on Birdview because there I publish every precise level that I use. So we said that in this middle zone we want to see price action. So in any case, if I see some formation here, I am going to trade that formation. Otherwise, I want to trade just at the edges. And if we use another time Fibonacci retracement from this highest point here to the low, you will see that the A point of the previous pattern is also a B point of a bigger bad pattern. In case of bad patterns, you only need a 38.2 retracement from B to see, and you can clearly see we have won it now. So it is going to complete at the 88.6 retracement of the X to A leg. So you understand that if I play at the edges, I am more likely to have a better result, because in those zones are the major players. The major players play around these daily zones that they call structure, support, resistance. You will notice that around those structure points, price behaves in a certain manner, and you can take advantage of that. So if it goes to the bottom, I'm going to trade it. If it goes to the highest point, to the top, I will trade as well. In the middle zone, I want to see some more confirmation, but at the edges, I can trade if I see something like this kind of formations. Next, we can see Euro CAD, and this is actually interesting because last week I had a completely different view, but my views are always explained by looking at structure. So the last week I was looking at this rejection that was right here. Previous structure acted as resistance, and I saw also these two movement, this violent move, and I entered the trade right around here. I placed my order, I placed my stop above the highs, and I took my first position right down here. Unfortunately, I wasn't able to take the second position because price immediately went back and hit my break-even stop. So at this moment, price is broken above the rejection point. What it tells you is that maybe you were wrong, maybe you had a broken view, but now that I see this break of structure of the previous highs, I know that the next point where I'm going to look for reversal is up here, and these zones all the way from the ending point to the price to the level that is price right now, I want to trade on the upside. What does it mean? It means that if I see something like a continuation pattern, like a flag, maybe price do something like this, it consolidates, and then when it reaches the previous resistance, it breaks through the trend line that was formed, and this is for me a signal of a trend continuation pattern. And in that case, I want to trade at the retracement to take my first position at the highs and my second position right at the point that I'm predicting price to arrive. So you understand what is my behavior, my thinking process when I look at the chart. This daily closure above the previous consolidation zone tells you something. It tells you that price wants to go higher, and you have to take consideration of that. So EuroCAD, I'm going to trade to the upside. I'm going to use continuation patterns. I'm going to use structure. If it goes directly back to here, I'm going to trade on the upside, and basically what you want to take into your consideration is that price may arrive at this high here, and this point will also create an advanced pattern formation that is completed right at the upper edge of this previous structure. So I want to trade to the upside until it gets here. When it gets here, I want to trade to the downside. I try to catch these little bounces from structure to structure because price is gravitates around these structure points. So upside bias until it gets here. Next, Pound New Zealand. Pound New Zealand is at the very highest point of this whole period. So price touched this level once, the first time on July of 2016, the second time on May of this year, and the third time is now. So 5 months ago and more than a year ago. This is obviously a price level that you want to use, because so of course I'm going to trade to the downside at this moment, because you see price is at the very highest point. It is in a high location, and I want to consider that. I know that this could play a key role in price action, and maybe we could see after we get some profit, we could see a break of this previous structure, and if it breaks, that is a clear sign of what price action is going to do, and it is go upside. It could go upside potentially until it gets here. So we have a huge zone to cover, but until I see a break of that level, I'm going to trade to the downside, because this is a major key point. This is actually a very important key point, a very important structure, a very important resistance. Until it's not broken, I want to trade on the other side. If it breaks, I will trade on the upside. I hope you're starting to understand my reasoning in front of the charts, because it's very easy if you understand the process. I look at the daily, I found key zones, and I trade around these key zones. But it is important to understand also that you need additional confirmation, unless you have something like advanced patterns. And if you have backtested those strategies, you have to trade those formations, because you proved to yourself that those formations were valuable, were giving you money in the past. So pound New Zealand, short bias until it breaks, let's say 1.90. If it goes above 1.90, a daily candle, if it goes above, I want to consider long. Till the time it is short. As usual, have a nice trading week. This is all for today. I hope you enjoyed. Leave a like if you liked it, comment if you want to, and we'll see next week. Have a good one.